The year is 2019. Barriers are breaking. New benchmarks are being set. Policies are changing every day. Businesses are on the cusp of greatness and we need to be ready, future ready to deliver this greatness. HSBC Commercial Banking and ET Now's A Step Ahead will put the spotlight on companies that are taking challenging steps to up their game in today's competitive market, allowing them to stay future ready and ahead of the competition. Hello and welcome to A Step Ahead, a special initiative by HSBC Commercial Banking and ET Now. I'm Sumit Lakhotia. Now in today's world, it takes a lot to set new standards. What with changing governments, global events and economic slowdowns, but the end result still stays the same, that the corporate world needs to take risks. Risks that are worth taking and risks that will take them a step ahead. Over the course of the next 5 weeks, we'll meet some corporates that are taking risks and that are setting themselves to be future ready with the help of a global support system that is HSBC. HSBC is one of the world's leading international banks with access to key global markets, serving over 40 million customers globally. With global connections and expertise across key domains, HSBC has established itself as a bank that connects customers with tremendous opportunities. Under HSBC India's key global businesses, commercial banking, global banking and markets, and retail banking and wealth management, customers are able to achieve more by scaling new heights, enabling them to thrive, prosper, fulfill their hopes and realize their ambitions. One of their key core areas, HSBC Commercial Banking, is a pillar of success that serves over 1.5 million small to multinational businesses globally, enabling them to achieve their full potential. HSBC Commercial Banking stands as one of the leaders in providing guidance and solutions to businesses that want to emerge in today's fast-paced world, supporting customers with expertise that can put them on the global map. In line with their global footprint, HSBC Commercial Bank services SMEs and startups, large corporations and MMEs, and multinational corporations. HSBC Commercial Banking in India has set the benchmark high by providing domain-based guidance and expertise to businesses, leveraging the power of their global network and providing direction to these organizations to grow. I sat down with Rajat Verma, the MD and Head of Commercial Banking at HSBC in India, to discuss all of this and much more.
First up, I want to talk to you about the Indian economy. Now, the Prime Minister has spoken about India, the Indian GDP, getting it to the $5 trillion magic number mark in the next 5 years. Your sense, in your experience, dealing with people as well, and what you're seeing on the economy, how is this panning out? What are some reforms that you think, maybe what's happened, but what more needs to be done? What's your sense?
I think the headline statement for me is that I think 5 trillion is achievable.
Okay.
And I say that because I think the mathematics of it suggests that it's achievable, right? A nominal growth of 11%. Should be possible,
right,
with relatively low inflation around the 4% mark that the RBI is trying to target. You get to a 7% real growth rate, which is possible and which is something that we have done, right? So obviously, if you've done something, it gives you the confidence that you can do it again. Now, you asked about the policy changes. I think a lot of work has been done around policy. Obviously, the biggest change was GST. Now, I know that GST, the execution of GST took time, but the reality is that it takes time anywhere in the world. You go, through the history of this execution elsewhere and you'll find that it takes time for this to embed. And I would say that it's still embedding, and it has benefits to the economy, significant benefits to the economy, which we will reap over this period of 5 years. I think there has been the law around bankruptcy, which was also a crying need, given that the extent of our bad debts are massive, right? And therefore, there was a need to set this problem and to try to get a solution out for it. I think the reforms around real estate have been good, and so on. So there have been quite a lot of reforms. We are sitting in India and we are saying that, look, this sector has a problem because it's cut. But India is going to obviously have a higher volatility index than others. And simply the base effect of where we stand today, where our demographics, etc., I think will ensure that the direction is set towards that 5 trillion.
Right.
So I think there's not much more to be done. There's not a lot more to be done on policy. But obviously we have to make sure that we keep executing well. We don't do self goals. We don't go one step forward, 2 steps back. And I think that is really important. So I think execution is everything. India may not benefit if, it has a disadvantage if global growth slows down. But equally, India has some peculiar advantages when global growth is not as robust as we would like it to be. For one, oil price comes down. And that's our biggest spend. And it's a big benefit. The other kind of benefit is that you may see corporates, manufacturers move some of their manufacturing or some of their supply chains or some of their assembly into countries like India. And we need that, of course. So I think there's obviously a little bit of headwind around global economy. Right. But equally, I would say that India is probably one of the better countries positioned to answer that challenge.
An important cog, you might say, in the machinery or in the wheel of things to keep turning is going to be banks. And I know they're not just going to be minor cogs, they're going to be integral parts. But banks are definitely going to play an important role, banking sector, because as the economy grows, you need finance, you need banking. Your sense of how this can provide a great opportunity for banks, existing banks, maybe, I don't know, new banks coming in this space?
I see an integral role for banks, of course, but I also see an integral role for non-bank finance companies. Now, they have been beaten quite a lot in the recent past, and the whole industry is really, has gone through fairly tough times. But if you see what they have provided to the country, to that last mile of financing, that speed, that execution, I think they have played a really important part in getting banks out of their stupor, getting banks to adapt to technology faster than they otherwise would have. And executing at a speed which perhaps banks would not have done if they did not exist. The second part around this is almost 25 to 30% of incremental lending over the last few years has come from the non-bank space, which is a massive number. So they have been taking market share because credit growth is not 25%, right? So they've been taking market share and providing a service to the customer. So I think, I believe that non-banks are here to stay. As far as banks are concerned, they're also going through a tough time, and you're seeing that different banks are going to follow different trajectories. But I think this is, let's call it a manthan, or like a churning. It's probably a good thing that is happening, and everything is coming out in the open, and investors, debt holders, everybody is kind of wanting more governance, more accountability. I think that's a good thing.
Yeah, so it'll be a good thing in the long term. It'll just make things better for consumers as well as companies and organizations. Recently some say that the RBI is on a rate cut spree. In your interaction with businesses, with corporates, with your clients, what's the sense that you're getting with these RBI cuts, and also overall, coming back to the earlier question of the economy moving towards 5 trillion, what's your sense with your interaction with these guys? What are they saying?
So specifically about interest rates, obviously the sectors who are most impacted by interest rates are the ones who were hankering most for it, like real estate, infrastructure, any heavy industries, etc. So I think they would welcome, and they are welcoming these moves of the government, and so many rate cuts over the last year is welcome. But equally, the credit spreads for some of these industries have gone up. Now in India, the credit spread is not explicit; it's implicit into a certain rate, and that's exactly what the RBI is trying to do. They're trying to make it explicit. They're trying to link it to a benchmark, which I think is a good move, and it is the way that the rest of the world has already moved to or is moving to. So I think I think the rate transmission will now increase Until now, probably the rate transmission was a little slower than you would like. So yeah, I think interest rates are definitely on their way down.
When we return, the conversation continues. Stay tuned to A Step Ahead.
The talk is that how can fintechs assist banks in becoming faster and becoming more efficient?
You know, earlier also you spoke about the role of technology, how NBFCs have used technology to kind of reach out. Banks are also increasingly using technology. Your sense of how this disruption has brought about a wave of change, because what I'm trying to say is that owing to technology, my banking procedures have become faster, transactions have increased also, and that has in a way led to a banker not just being your money transactor. A banker has become more of a guider and advisor as well. And HSBC, I know, does this a lot. So two-pronged question. One is on the technology point of view, how have you seen things change, and the advisory role, the guidance role that banks and especially HSBC that have taken that up?
Well, let me try to answer the first part of the question around technology. So go back 5 or 6 years, and there was this whole thing about all the, the challenger kind of institutions, the challenger banks, the startups, the fintechs, who would take over these dinosaurs who've been existing for a very long time, the banks. And there was this. There was quite a lot of discussion internally within banks that is that really going to happen? So today the talk is very different. The talk is that how can fintechs assist banks in becoming faster and becoming more efficient? Because what I believe is that banking or financial services has two aspects to it. The one aspect is the technical or the technology part of it. And the other is the trust part of it, or the customer relationship, the trust part of it. Fintechs had the former, banks had the latter.
Right.
And as I see it, I think it's the banks now, because it's, in my view, it's easier to get technology than it is to get trust.
For sure.
Right?
Definitely.
So I actually feel that banks have benefited a lot. They've hardly been disruptive. If anything, they've adapted to what's been changing. I think the next wave is around trade finance. It's around a distributed ledger, or what people call blockchain, more colloquially, because the real pain is really when you have complicated transactions across several geographies. And what I think will happen, why I think it is important, I'm digressing a little from your question, but why I think, it does, there are 2 or 3 advantages to technology, right? Moving money in India and locally, fine, you get some benefit, you move quickly, that's it. But when you do trade finance, you actually, reduce the possibility of fraud, and India has been unfortunate, recipient, unfortunately, of fairly large trade finance frauds. So you cut that kind of possibility down. You cut paper, so you improve efficiency, etc. But I think the other thing, the third, probably the most important thing that technology can do in international finance is that it can cut the cycle time down dramatically.
Right.
And what that does is it cuts the financing time down.
Yes,
so the reason why financing exists in trade finance is because there's a lag. There's a ship on the way, it takes 60 days or whatever, 30 days or whatever, and then you have credit terms. That if you cut that down at an international trade level, you're talking very massive numbers. So I think that that's probably the next development.
When you talk about international finance, now, of course, HSBC has a global presence, I think 54 countries around the world. How is that helping your customers, both in India, so who you're able to provide a global perspective, as well as global customers who are maybe looking to transact with India or come to India? Tell me a little bit about that. How is that helping you help your customers better?
I think it's best explained by explaining what we are more familiar with, what a foreign company would face in India. Let's start with that, and then I'll come on the reverse side, right? So think of a foreign company who's coming here and wants to set up a shop, right? I know that India has improved in their ease of doing business, but it's still a currency which is not open on the capital account. There's several reporting requirements. There's several different ways of documentation or banking, and of course then there are the other rules around Companies Act. You know, who can you form a JV with? Which sectors are you allowed to invest in? And I can go on, right? So essentially, the purpose of a banker is not just to open the account and not just to say, okay, now your money has come in and you can withdraw it. That is a purpose, but that's only a purpose. It's not the purpose. The purpose really is to be able to, you know, be an advisor to the client, to tell them and explain to them and share experiences of other clients with them. And to be honest, as an authorized dealer, you're even expected to you know, hold the hand of the company as far as exchange control goes. But I think a banker can do more. And I'm not talking about formal advisory. I'm not talking about an M&A you know, mandate, so to say. But we do play that part, and it's a really important part of what we do. Now let's flip it to the other side. When an Indian company goes overseas, right? Equally, I mean, you think about the various countries across the world, and you think how complicated they are. And every country is different. The challenges that you'll face in, say, China versus you know, the US or somewhere else are going to be really tremendously different. And just to have a friendly banker to tell you, okay, this is how you know, this is how the environment functions here. These are good counterparties to work with. This is how trade finance works here. This is you know, every country has different pricing benchmarks. You know, so China's got one pricing benchmark, India's got another. Of course, the West is largely, the developed world is probably a more homogeneous set, and it's probably less required. So I think to answer your question in one line, really, the banker is an advisor without truly being, you know, it's not a tax advisor, it's not a transaction advisor, but it is a more, it's a friend who can hold the hand of that customer.
Superb. You know, over the years, there's been a lot of focus on sustainability. The UN's come up with its sustainable development goals, etc., etc., a lot of that. So every organization is now not just about profit, people, planet, all. And this has impacted banks also. So I know at HSBC, you guys have a very strong, or rather the sustainable finance bit is a really key, a really integral part. Tell me a little bit about what's happening there and what can we, maybe more that we can expect to see there.
So sustainable finance is really an important part of what we do as a bank. We decided to take out a number commitment to it because you know, you have to be able to put money where your mouth is. So that was the philosophy behind which we said that we need a target or kind of a direction for the institution to want to support this industry. So we've got a commitment of about $100 billion till the year 2025 to facilitate, to support sustainable finance in various different forms. Those forms could be in the form of energy, it could be in the form of mobility, it could be in the form of real estate buildings which are green and so on. So we are, I think we are already a fair distance of the way through, and I really hope this is one of those targets that we comprehensively beat. Now it's not a social activity. You know, that's where it gets, it is not a social activity, it's a business activity. Today, if you look at India renewable finance, right, it's not subsidized. It has certain advantages given to it in the sense that you know, states are supposed to buy a certain amount of power, and et cetera, and you have had central bodies to make sure that the payment gets to them. But those, I think, are more like greasing the wheels or greasing the machine. It is not really giving any handouts. So it's an industry, I think, whose time has come and who needs the supports of, which needs the support of banks and investors and and everybody to step in.
Right.
I mean, this has been one of the warmest years in the world, and if you've seen some of the videos kind of going around around the North Pole, you know that this is an urgent need, and I think banks have to have a really important role to play in this.
That's for sure. Rajat, as we wind up, we're on this series called A Step Ahead. I'm really excited that we're starting this series. We're going to be going around the country, and you and me are going to meet some stellar individuals who are running some really amazing companies. What can our viewers expect to see on the next few episodes?
So when we were thinking of this episode and we were kind of trying to draw a sketch of what we'd like to show viewers, I think the first, we felt that there are certain themes that are emerging in the economy, or generally speaking, in our lives, in the world, which are unique and which should interest people generally. And within these themes, so let's say one theme is sustainable finance.
Right, right.
Or let's say another theme is inclusive banking, or it's technology in financial services. All of these touch everybody's lives in one way or the other.
Yes.
So our thought really is to go to some of the leading proponents of these ideas, irrespective of which industry they belong to, and actually try to learn from them, their journey. So I'm equally excited about meeting these people and learning from them as well.
As we embark on this thought leadership journey, the spotlight will be put on companies across key areas that either have or are set to position themselves among the league of the extraordinary. The focus areas include globalization, sustainability, product innovation, digital payments, and total quality management.
That's all on this episode of A Step Ahead, a special initiative by HSBC and ET Now. Over the course of the next 5 weeks, I'll sit down with the heads of some companies to find out what they are doing differently so that they are setting new benchmarks in their industries. Stay tuned to the series, and many thanks for watching.